All right, welcome back. Let's have a look at Alibaba. Going into the weekend, stock closed at 114.50. So this chart on my screen, you can see this represents weekly candles. If I switch to the daily candles, so last time we talked about this name right here, somewhere around 112.50. I was talking about the volume of this stock. If you're somebody who is like tracking it short term and maybe trying to get an exposure, again, these videos are not financial advice, purely for educational and entertainment purposes only. I was talking about volume and I was talking about option activity, and that it is going to chill out at some point. So you can see clearly for the last at least 3-4 trading sessions, volume has been declining, and therefore stock's range, which means high-low for the day, has been decreasing. Of course, it has been gapping up and down, so that's the risk you're taking if you're somebody who's swing trading it. Of course, it could be pretty hectic if you're trading ultra short term and outside of the money calls or puts. So stock above still its 5-day moving average. So what's the point again? So let's dive into this. So the point was that implied volatility, stock doesn't have to come down. Implied volatility for the stock will come down, which means IV crush. I'm sure you have heard of it somewhere else, where stock moves pretty large initially, and then it doesn't do much for a few days or even weeks, where basically there's not much of a hype anymore, or there's not much of a volatility, price action, volume, everything just slowly fades, where contracts become a lot cheaper than they are. So right here, right now, if we take a look at the option chain of Alibaba, currently all the way to April, actually October 18th, which is the nearest big option expiration, which is monthly before election, and then November 15th. IV is still high, 70%. On average, the stock has like 45% IV or so. You can see all the way, you can go take a look at the 2025, where implied volatility, it's not crazy, but still expensive, right? So going into October 18th, stock is implying $11.60 up or down move. So my point is, this will be declining as implied volatility changes, as stock basically doesn't have to come down. It can just consolidate. It can still gap slightly up and down, but by price action, you can see already this week alone, gaps were selling off, except for Tuesday, right? Wednesday gap, we sold off and a little bit drift higher, gap down. During market hours here in the US, again, I'm looking at the hourly chart of the stock. It's not doing much, okay? So people basically are not chasing anymore at these levels, but at the same time, they're not putting too much of a selling pressure. I know a lot of people want to get in. I know a lot of funds will get in, but they funds usually they don't chase. If they can't, they will just sell premium. Okay, if they see anything elevated like this, Nvidia, they have been milking Nvidia. So the point is, implied volatility will crush. If you're an options trader, just keep that in mind, that you might have a better opportunity even at this same price by letting it sit for weeks and not touching the stock for at least a week or so, and you would get exact same contract that you were looking for. Let's say it's expiring next year, a lot cheaper. That's the point. And I'm just going to break down one trade maybe here, where option put to call ratio today, 276,000 calls traded, 144,000 puts traded. So clearly a lot more calls being traded, maybe twice more, and a lot of spreads, which means a lot of institutions are trading it. Okay, so spread means they may not own the underlying, but they want to capture this implied volatility. So they are selling short dated calls, which are, let's say, October 18th let's one just example right here, very top, very large one, 2000 contract for October 18th. They collected $3.60 by selling 120. So they're like, this stock is not going to be trading above 120 come October 18th. And then at the same time, they're buying December 120 call for $8.95. Exact same contract, identical amount of contracts, 2,000 contracts, which means longer time frame, they're long, which makes sense, right? Ultra short term, we all agree that the stock is overextended because it's large cap, okay? I'm not talking about smaller caps where you can see Tiger, Up Fintech. This name has been pushing crazy. Futu Holdings, Billy, what else out there? Tcom, Jade. I mean, smaller caps, I mean, they can still push. But Alibaba, 274 billion. On my watch list where I'm watching these, this is the list that I have for Chinese names. Tencent, 558 billion. So these are the three large stocks that are, I mean, in my opinion, this is it. What else do they have any more higher than this? Alibaba, Pinduoduo is $214 billion stock. So if we take a look at the option chain here, it's pretty clear to me that a lot of outside of the money calls being traded, which means these are being sold in the monies, maybe probably being bought. But in terms of resistance, same levels that I shared last time. 120 is going to be acting ultra short term. Again, any support, any resistance at some point breaks, right? It's just purely supply demand. At some point, it has to be attractive at 120 where people are willing to pay that price or chase. That's when it will break out, right? Right here, right now, people may be a little bit hesitant already based on last 3 days of price action and based on volume as well, because most of this move came thanks to short covering, because a lot of funds operate long short format. Basically, they will always have long basket of stocks, and they will always have some stocks that are shorting. So in recent months, year, I mean, China was the perfect short for many funds. So I'm not saying that they all covered it, but most probably are out. So 120 resistance, 125, 130-ish going to be the next level of resistance, and then from there I'm going to be watching gaps that it created. And again, it all depends why this stock could stall at 120 all the way till they report earnings, maybe all the way till elections, because after elections there's going to be a lot of headlines again about China. So earnings coming out November 21st. So far, that's the scheduled earnings. So if they report good earnings, I mean, that's what will give this name another gas going into the end of the year, basically your holiday run. That's when you will get it. If they report good earnings, and again, they're paying dividends right now. So I don't remember them paying dividends. So it looks like last 2 quarters, they were paying dividends. So that's the update for Alibaba. That's what I'm watching going forward. Thanks for watching. See you in the next one.